right, guys, here to help us out. We've got a long show. Jim Frischling's back to help us out, president of NewOak Capital. Scotty,
I think to Charles's point, today was not about oil. Oil didn't hurt by any means, but today was about earnings. Today was about companies across the board. It started with Pfizer, as you said, and I think, and yes, some of the multinationals are complaining about the strong U.S. dollar. That is a real headwind. But if you look at what's going on domestically, I think this is a corporate earnings story. I think the jobs report, not to front run our story, it's going to be good enough that this momentum in the stock market and the earnings is going to continue.
The supply numbers still tell us that it's a ways away yet. I'd be careful.
I think we're in the bottom end of the range of which you just highlighted. I think above 50 now people are starting to feel a little less pressure. Again, there was no change in supply and demand that actually caused oil to plummet the way it did, and there was no change in supply and demand that caused it now to rebound. So this is now a lot of trading activity, but I do think 50, 60 plus oil, and we have a calm, and we can focus on other things.
Consumer cyclicals. So there's Jim. There's someone in New Guinea right now weaving a basket, and they're like, I need people in America to buy this bad boy. Is that going to happen?
We're going to do a lot. And I'm glad Darryl was talking about certain sectors will benefit, but no, the U.S. consumer could not save the global economy, and also the trade deficit. Clearly, a lot of people got this wrong. It wasn't hard to figure out why where we're at. It is weak foreign growth, and it's a strong dollar. Right. And these headwinds and these problems that some of these multinationals are talking about is playing out in the numbers. But to Darryl's point, the consumer, and they will feel this benefit from cheaper gas. It's a little bit of a lag. I think maybe I personally was a little bit thinking it would take effect sooner. Right. But I do think the consumer is going to benefit from this.
People have gotten a little smarter than that. So that takes us to our next real deal, Jim. These guys they're on the loose. They're the hottest guys out there, and they make things happen.
They are, and actually, I think I was on some of those early shows with you when I had to be the one defending the Acklins and whatnot for their role. So I'm actually now going to take maybe the devil's advocate position. So much money being raised, and so few companies. There are a lot of companies to go after. I worry about how many companies these guys actually can do some good things with. That doesn't say I don't think they can do great work. They try to return money to shareholders. They try to cut costs. They try to do spin-offs. They do bring, unlike a private equity firm that does it with large amounts of debt, these guys do it with small equity stakes and that soapbox you talked about. But I am worried with a fifth of all funds going into hedge funds, as you just talked about, that put the word activist next to their name. I'm worried about how many guys have to chase fewer and fewer deals, and there's going to be competition, and maybe it won't be such a great thing for the shareholders.
What do you think, Scotty? Does anyone think it's an indictment, though? Because this article says that this stuff doesn't happen in Europe because we have this sort of laissez-faire capitalism, and this is a de facto way, the void was filled where regulators wouldn't fill it, then these guys are sort of filling it.
I mean, I'm okay with letting the markets play out, but I will say that it's not black or white, but the short-term focus of a lot of these guys is going to result. There'll be unintended, or in this case, intended consequences, such as layoffs, spin-offs, lack of long-term growth because you want the money now, and that to me is a negative. But you got to let the markets play out.
All right, so on that,
I went. I thought tech would be the hot topic. I actually went more brick and mortar because I went with Intercontinental Hotel Group. There's already some activist investors pushing tax inversion rules have not been changed. There's still a huge benefit to execute one, and with the M&A tailwind so high, it's hard to get growth organically, and I think that's for one of the big 6 hotel companies, Intercontinental Group could be in play.
If I'm a long-term investor, I would not be shaken out of this stock, although I understand your frustration. What do you think, guys? I mean, this is a crazy time.
Yeah, I mean, first of all, I think this is a really good company, and I think they did put up great numbers. I think what frustrates investors is they have a history of delays. They have a history of whether it's...
But in general, though, Jim, I mean, listen, we're going to talk later in the show. GoPro was at 1.62, now it's down $6. Twitter was down, now it's up 5. I mean, it's absolutely, it's crazy. It's nuts.
But again, and I'm not a seller of this. I would hold that position. I'm just saying that they
What makes you hold, though, after earnings? How do you ignore the initial reaction?
I would have asked, if I had invested in this company, I would have done it because I believe they're putting out products that their customers want. And if you look at the reviews in their game, if you look at how they're being received, they're deemed to be in a unique category.
Good game pipeline, too. I mean, future products are going to be really...
But I think it's something that someone could put in their 401k. What do you think about this one, Jim?
I was a little torn. One is I think there's a little insider selling. The PE, to me, was a little bit high, but they really did a very strategic play with their iron solutions. The ag business was causing them some issues, and I think management really stepped up to bring in a very synergistic partnership with these guys to try to balance it out. And so on that basis, I really do actually feel it's an interesting company to be watching. GoPro is a stock that you and I have kind of gone back and forth a little bit. They want to be a media company. I see them as a camera company. They had the best quarter. They couldn't have had a better holiday season, put up numbers, and you said they're getting hurt. And I just wonder if maybe maybe they're just an acquisition target, because the fact is, I don't think the market's now, it's lost a little bit of its luster.
The shorts have